Every entrepreneur has a story. Welcome to Happy Half Hour with an Entrepreneur, where each episode your host, Brian Carney, will share a drink with a successful business owner and have them discuss their unique journey, gaining insight on what it takes to be an entrepreneur and the different ways to get there. Brian isn't just a beer nerd, he's also the co-founder of River's Edge Advisors, a financial planning firm headquartered in Delaware, specializing in working with business owners. It's time to pour yourself a drink and enjoy a happy half hour with an entrepreneur.
Hey everyone, welcome to Happy Half Hour with an Entrepreneur. I'm your host, Brian Carney. My host today is Doug Motley, who is the principal of JLAM, which is a real estate asset management firm. And prior to getting into the business, he started much like a lot of people in the great state of Delaware do at MBNA. And working in the banking world. He ultimately became a CFO for a real estate firm before co-founding his own private equity real estate firm. So Doug, welcome to the show.
Thanks, Brian. Great to be here.
Great. So today I'm going to be trying a Two Roads Hazy Boy. For some reason, I've been really into drinking hazy IPAs lately, and Two Roads makes an awesome beer that I love called Lil Heaven. So I'm going to give this a try during the show, and we'll give it a rating at the end. What are you going to be drinking?
I'm with you. I'm drinking Catboy's New Friend. It is from the Vale Brewery down in Richmond.
Oh, nice.
Quality spot. So this is a nice little IPA as well.
I'm going to have to try that. I'm going to have to write that on my list.
Yeah.
All right, great. Well, let's jump right in. So tell us a little bit about your company.
Sure. So Jack Lingo Asset Management at JLAM is a company I founded or co-founded about 10 years ago with four partners. And we really founded the company to monetize on both for our investors and for ourselves on our ability to identify and capture value in real estate. And so, we anchor our investment strategies in a process where we identify macro themes, and then within these themes, we invest in or develop properties that we feel are truly differentiated and really places where the end users will be proud to live or work, as the case may be.
Yeah.
And so, we leverage our experience. Our team's been investing some for as much as 40 years in the real estate space. And so we've got a lot of different experience sets to tap into. And we leverage that experience to really see the differentiated attributes in properties, really by understanding where we think demand is and what users really want. And then we make investments or develop and create places where we think they'll be proud to live or work, and that the returns will ultimately follow if we pursue that strategy.
Okay. So at this point, what percentage of your projects are commercial versus residential / neighborhoods?
So right now we have three kind of active investment strategies. The first is the one we've been active in since inception, which is in the for sale residential development space. So think of 200 or 300 unit single family home community, that type of thing. And really what we're doing there is we're turning what we think is a special piece of property or land into an even more unique community. And we really use that word with a lot of import, because that community feel, that community sense really between the people who end up living there is very important to us, and something we think about from the very beginning in how we're designing how a community may be laid out, what the components are of it, how lots are oriented towards each other, what the amenities may be, what its relationship is with the physical attributes of the property, like woods or a pond or hills, things like that.
Right.
So that's our first strategy. Our second strategy is multifamily ground up development. So garden style apartments. Again, that taps into a lot of what I just described, but also layers in some more social factors such as employment growth, population growth, and really trying to provide here in coastal Sussex, the average home price has gotten pretty high, and that's not necessarily attainable for everybody who necessarily works around here.
Sure.
So we identified an opportunity to create high quality new rental housing programs that where you're really paying attention to the details, like 9-foot ceilings, granite countertops, giving, balconies, basically creating a place where someone can be proud to live and be comfortable having a new amenity package. And really that was an underserved segment of the market that we really started getting into about 5 years ago, and have been building out that strategy since. And then the last one, and this will probably draw some further discussion, but is acquiring existing office properties. Okay. And that's something that we kind of been working on for a long time, but really launched last year. And that is, really trying to identify and target unique and differentiated office buildings that are already existing, and in select target markets that we've been researching and investing in for about a decade. But really, taking advantage of the current market conditions and opportunities to buy what we think are really compelling investments.
That's great. So I want to jump back to the communities thing real quick. How much research do you guys put into an area and a part of land before you ultimately decide to invest in it, and then what you think that can become?
A lot is probably an understatement. So that's a pretty broad question in that, there's a whole lot of components that go into that. There's the market and submarket analysis. There's the actual physical property, walking the property, making sure you understand what the physical features are of it, as well as the actual development plans, and if we are involved in or solely responsible for creating them from inception, or if maybe in some cases we're buying something that's fully entitled and shovel ready and kind of already designed. Yeah. And understanding, how that project was engineered and does it really fit, our investment theme and goal of providing a differentiated and non-commodity type of community. Yeah. So it spans a pretty wide ranging space there. But right. But there's a whole lot of details that we have to get into and pay attention to.
No doubt. So if you look at 10 pieces of land, how many of them do you actually move forward with?
Less than one.
Wow.
There's probably an initial screen that's at this point partially subconscious. So, the 10 that we look at, there's probably 30 that don't even kind of get into the bucket of we're looking at, right? Somebody put across their desk.
Yeah, right. They don't get past the first round. Yeah.
Yeah, exactly. And so, because our standards are high and our criteria is pretty high, our first screen clears the deck pretty significantly, and it takes a property and the potential of a property to pass a pretty high standard to get ultimately to where we're, moving forward and ultimately developing out a property.
Yeah, that makes a lot of sense. You ever run into, how often do you run into environmental issues where?
It's generally rare, but we've done one brownfield recently, and it ended up not being, terribly bad, but there are some useful programs through the state that help to, are kind of good for all, and that help us clean up some existing environmental issues. But in all those cases, environmental is another big bucket where you can have kind of contamination, environmental type things, but you can also have more of like wildlife and plant type environmental, not issues, but considerations. And, right. And they could even be just more of environmental as it relates to where wetlands are located or where a stream or creek may be. Yep. And really what we try and think about is how do we turn that maybe constraint into an advantage? Yeah. And use it, incorporate it and integrate it into our design to become a feature for the community that, somebody else developing just a flat cornfield or something just doesn't have the advantage to use and leverage. So we really try and look at those situations as opportunities, not as problems.
That makes sense. So let's talk a little bit about your path to becoming an entrepreneur. So we always make the joke here in Delaware that many people went to University of Delaware, graduate, and then they started bleeding green, as we say, and working for MBNA. For those of you who don't know, sure. MBNA was a large bank that was headquartered here in Delaware and was bought out by Bank of America. What would we say, Doug, 15 years ago? Is it?
Yeah, it was 2006.
Okay, perfect. See, so you started there. So how do you go from corporate banking world to starting a private equity fund and, sort of making that leap to do that?
Sure. So, I'll start with how I even got introduced to MBNA in the first place. And that was, I Delaware native, went to Dover High School, ended up going to University of Delaware in large part due to a scholarship that was provided by MBNA. So they had created a scholarship program for Delaware residents to go to Delaware state schools. And they had other similar programs in other states that they were, had a large corporate presence in, like Maine.
Sure.
Anyway, so that got me to Delaware. As part of that scholarship, you were also offered the potential to have an internship. So I did that a couple summers, and that ended up leading into a part-time job throughout the school year when I was in college. And then going out of college, joined their management development program, which was a really cool experience. It was 25, 30, mostly just graduating college folks. And so you're in a group of people that are all, the same, very similar minded and same energy and all that. And so we probably embodied work hard, play hard as much as we could. So, had a great experience there. It's a 1 year long program rotating through a whole bunch of different departments in the bank, kind of most of the key ones that were there. And then spun out I had a great experience at the bank through the next 5 or 6 years. So when the Bank of America acquisition kind of happened, it's announced in 2005 and ultimately occurred in early 2006, actually was chatting with a good friend of mine and I think yours as well, Sean, and we're actually at Scratch Magoo's in Wilmington having this conversation. But in my infinite wisdom as a 26-year-old, I'm explaining to him how there's got to be more out there than credit card banking. That's the only thing I've ever done.
Right.
I think I want to try something else, but I don't know what that is. And so, kind of talked about a lot of different things. And he mentioned I've got someone at the beach who I do a lot of work with, relatively young guy who's, involved in a lot of really interesting things on the real estate front. I think you should meet him. Don't know why. You guys, I think, probably have some common friends and would hit it off. And as a person who grew up summering in Dewey Beach for, since I was 2 years old or something,
right.
It didn't take a whole lot of arm twisting to get me to come down to the beach and meet with somebody. So Sean introduced me to Preston Shell, who's been a very active developer in the real estate space down here for a while. And we hit it off. I knew my sole, experience in real estate at that point was I had bought one house and probably did that very poorly. So my track record was not the reason why I ended up making the move, but Preston was great and took a leap of faith in me and brought me on into his finance organization. And it was kind of a sink or swim setup. And fortunately for me, I jumped in head first and was able to swim.
Amazing.
And shortly thereafter, kind of worked my way into the CFO role there, and that was really kind of the impetus to going from a 30,000 person organization to a 20 or 30 person organization.
Right.
And really seeing how companies get started, just everything down to just the certificate of formation with the state of Delaware to organizational documents, and then all the way through the life cycle of a company. And that really kind of got the entrepreneurial bug flowing in me, so to speak. So I started my first company in 2009, which was Rockford Capital, which was formed it's a private equity real estate business formed to invest in distressed and undervalued commercial real estate in the Mid-Atlantic and Southeast. And over the next handful of years, myself along with 3 partners, sponsored and raised and then subsequently invested for private equity funds targeting those real estate properties in the Mid-Atlantic and Southeast. And now we're kind of at the point where those funds are all fully invested and we're kind of harvesting those investments most of the way through that. And we're kind of in the final stages of realizing the business plans for each of the remaining assets there.
Wow. That's pretty crazy. So you go to work for a bank, You're out having drinks with your friend. Your friend says, I don't know why you should meet this guy, but you should. And that literally changed the trajectory of your life.
Absolutely. Great summary.
That's kind of crazy when you think about it, to have that happen, especially when you're 26. Obviously you never know when it's going to change or what's going to happen.
For sure.
To be able to have that happen, that is amazing.
Yeah. Life is an interesting sequence of meeting people and interacting with people and creating and having opportunities happen and trying to take advantage of them when you can.
I love that Sean said, you should meet this guy. I don't know why, but I think you should. I've said that multiple times in my life. And a lot of the times it ends up being true, and trusting your gut on that is kind of interesting.
Sure. Yeah. A lot of good things happen following that comment.
Yeah, that's a great point. That's a great point. So then you have a second company that talk about Broadpoint a little bit.
Sure. So shortly after forming Rockford, had an opportunity through another lifelong friend who's an engineer by trade, where we saw myself and these two other partners saw an opportunity where in the Southern Delaware market, we felt there was a gap in professionally managed commercial general contractors that really put client experience, customer experience coming from MBNA, customer top of the pile, really putting that at the forefront of their corporate priorities. And so my role in that was really investing in and kind of playing almost a board member type role of opening doors for new business relationships and providing some finance oriented guidance to our operating partner there. And really over the next, 8 or 10 years, that company grew from a pretty small investment and a pretty small first year of revenue to, more than $10 million of revenue. And
holy crap.
My partner, Nick, and I exited that investment a little over a year ago through a transaction to our operating partner. So it was kind of a really great example of finding a good idea, putting a little bit of money against it and a lot of sweat. And if you're in the right space, it can really pay off.
So you're investing in distressed commercial projects, and you look around and you go, nobody's really fixing these up in a really strong way. So you guys decide to create a business that actually would help fix up some of the distressed properties.
Yeah, it wasn't really stuff that we were owning.
Okay.
But it was more of when we would actually hire somebody when we were in situations where we needed to hire a contractor to do some work, the experience we had was lackluster.
Sure.
And so we said, there's got to be a better way to do this. And why shouldn't it be us?
Yeah. That's amazing to be able to, that's true entrepreneurship, is you start one business and then another one is born because of your experience. A lot of times you have a certain customer service experience and go, okay, well that needs to be fixed. And I think we can figure out a way to do it better. Mm-hmm. So would you say that you always wanted to be an entrepreneur, or did you think when you signed on at MBNA that you were going to be a lifer there?
No, I was certain I was going to be a lifer there. And, I think, the climate of now versus 20 years ago, it's also hard to believe it's 20 years ago, but
yeah.
The economy and mindset of most people is, the lifer type scenario is not the default. And I think then it was the default, maybe starting to migrate away from that. But really the difference for me was, to me, MBNA had a very entrepreneurial environment. There was a very clear path for me to senior leadership. And then when the Bank of America transition happened, it was just a very different culture that prioritized different things. And, just going from a 30,000 person organization to a 200,000 person organization, it was just night and day and very different. So fortunately, that kind of caused me to come up for air and look around for other things, and great things ensued. Well,
it's kind of interesting because when you look at the culture that was at MBNA, that was a real sense of community. Like you said, you worked hard, you partied hard, you played hard with the people that you worked with. But, the sense of community internally, most people have very positive things to say about MBNA and their time there. And then, that sort of translates your focus on customer service and making the customer happy now translates over to building communities and having the customer service experience that you want. Those people that are going to be buying a house in one of your communities. It's kind of interesting how that all sort of permeates throughout your life.
Sure. There are a lot of concepts and themes and priorities from the things that were ingrained in me back in the MBNA days that still continue to this day.
That's awesome. I love it. So you personally, what is your actual role? So what do you do every day?
Sure. So I'm responsible for investment research. So kind of what's going on in the investment climate as it relates to real estate.
Yeah.
And then developing investment strategies around the outcome of that research. So, all right, so we think there XYZ is going to happen. What's the best way to get exposure to that? And then, okay, now that we have these strategies defined, let's go find the deals that fit within those strategies and analyzing those deals in the acquisition side. And then the last piece of that is kind of the capitalization of those investments and the relationships with both our equity investors as well as our lenders. So basically the front end, what are we going to do? And then specifically what deals are we going to do? And then how are we going to capitalize it?
That makes sense. So what do you prefer working on the community / residential neighborhoods, or do you like the office commercial side better?
There are pros and cons to both. I mean, I guess like anything in life, and I think they're both really exciting, but just in different ways. And it kind of goes to a little bit of what I love about my job is the blending of science and art. I think by default, I'm much more analytically oriented, but the art aspect of real estate and how that ties into the analysis side of things really makes things interesting. So on the commercial side, there's the pure number, dollars and cents. You're looking at an income stream, you're valuing that income stream and saying, okay, what's the probability that it's still there 5 years from now? And
it's a math problem.
Exactly.
Yeah.
However, where the art comes into it is you can have two of the exact same income streams with the exact same tenants and the exact same credit. Everything's the exact same, except for you walk into one building and you're like, wow, there's a lot of light here. This is a really neat architectural space. Oh, by the way, there's a Starbucks and some cool walking trails right next door. Or you can walk into the same exact income stream again, and you walk into an 80s brick building that's got 8.5 foot ceilings that are, drywall and FRP. And it's the last place you would ever want to show up every day. Right. And so that's where the art really comes in is trying to figure out, what is it that tenants want to pay for? Where is it that people are excited to or more uplifted to go to work? And therefore the benefits to the tenants are their employees show up, their employees keep showing up. They get better labor, that, people want to work there. And there's a whole lot of kind of second, third order things that you can think about that can really differentiate two things that look dollars and cents wise or numbers wise very similar.
Yeah.
And that's really, the exciting part about the commercial side. On the residential side, especially in development, it's a different animal where you're starting and a lot of times with a clean slate and trying to figure out, okay, here's what our market analysis is saying. Here's where, we think the unmet demand is in terms of people looking for a $500,000 house or $1 million house. Now, how do we start to design that on this piece of property? Oh, and does this piece of property have any really interesting physical attributes that are just there by nature that we can incorporate? And then what are the built environment kind of things from an amenity standpoint that we can incorporate? Are you able to integrate those two things in some way, like having building a bridge over a creek or something like that, or walking trails, just things that are going to be differentiating about a property or a community where when somebody drives through, look, there's a lot of different choices out there for all these things we're talking about. And whether it's a family going to buy their first home or a tenant looking for 5,000 square feet of space, you're likely going to look at more than one option. Right. And we want to be the one that you may not remember the name of our project or our office building, but we're the one that has that wow factor, that one thing where you're like sitting around the dinner table. Oh, remember that one place that had the cabanas that were by the pool? That was really cool.
Yeah.
But that's the kind of thing that we're trying to strive for.
That makes a bunch of sense, to be able to have that. You always say when you're looking at real estate, you kind of walk into a place, you go, all right, this is the one. It's sort of like picking a college. You go to college and you look at a bunch and you finally settle on and you go, I could see myself here. It's the same deal when you buy a house.
And you may not be able to articulate exactly why, but you know it when you see it.
Exactly. Yep. That's a great way to put it. So your industry, probably next to travel, hotels, restaurants, was affected likely the most by the pandemic. You know, people stopped working at their offices. I'm currently in my basement. You're at your house. So talk a little bit about the impact that the pandemic had on you in particular, and then we'll kind of talk about what you see moving forward.
Sure. So professionally, at our for rent, so our multifamily projects and our for sale communities, March and April of last year came to a grinding halt. You know, it was a goose egg for everything. Yeah. Fortunately, in the state of Delaware, all of our contractors and everybody were able to continue working. So there was minimal disruption to progress for things that were being built, whether that's, you know, putting pipes in the ground or, you know, putting trusses on a building.
Yeah.
However, in terms of new sales and new leases, it all stopped. Interestingly, you know, in May, things started to open back up. People started to move around a little bit more, and we really started to see things come back. And shortly thereafter, they had far surpassed the kind of trajectory where we were pre-pandemic.
Yeah.
And it's been, on that side of the business, it's been guns blazing for the past year. Inventory is unbelievably low. There's some other things going on the cost side of the business, but in terms of top line, it's been way better than expectations.
Yeah.
On the office side, you know, it's interesting. I was reading a survey the other day and it compared, you know, they interviewed a group of CEOs in last August, and then they interviewed the same group in March. And they said, what's your expectation for what your business's real estate footprint is going to be? In last August, 67% of them said they're definitely going to shrink their footprint. That number's down to 17%.
Oh, wow.
2 months ago.
That's crazy.
And so it is. And, you know, one of the things we were talking about before was the impact of work from home on office. And yes, that's a headline grabber. Yes, it will have some impact on the amount of office used, but probably more so how office is used, I think. And look, in our opinion, there's a lot of pushes and pulls here. There's a couple things on the headline side that, you know, that a lot of people pay attention to, but there are a lot of currents that are impacting this, such as, I'll just hit on a couple, and we've done a lot of research on this and kind of put together a full research brief on it. But, you know, we see the need for office not going away, largely because of collaboration, education, and kind of learning from others and your coworkers, and learning by osmosis of the guy in the office next door, or the cube next door, and hearing how they're dealing with things.
Culture, and then for sure. Yeah.
Culture, absolutely. And productivity. And productivity is a really interesting one for me. You know, there was some early research in probably the first quarter or two of the pandemic showing that productivity in some measures was up. However, everything else was closed. Right. There was nothing else to do.
There's nothing else to do except work. Why not? I'm sitting in front of my TV watching my 15th hour of COVID coverage. So why don't I just check my emails?
Sure. So as other options, you know, whether that's gyms or, you know, recreational things or bars and restaurants or whatever it may be, as those other things become available, and you can go down to the cafe at 2 p.m. to have a cup of coffee while you sit on the sidewalk and watch people instead of doing the work that you were doing, you know, early on in the pandemic. I think that, you know, that equation changes a bit. So you've got those elements which are at play. You also have the fact that, you know, we've seen a densification of office space over the past decade or so, where employers have been putting more people in less space and really driving down their occupancy costs. Mm-hmm. We believe that there's going to be a reversion of that trend towards the mean or towards the average, and you'll start to see more space per employee, or, you know, for every 100 people that an employer is going to have, they're going to need more space. They want them spread out a little bit more, and the use of their space is going to be more collaborative in nature. So it may not be, you know, a line of cubes that are 2.5 feet apart anymore. It's now, you know, a larger room or a group of huddle rooms, things like that. And just the way space is used will be different, but we don't really see demand falling off a cliff.
Yeah.
All those things are kind of painting it with a really broad brush.
Sure.
Now we're not looking to invest $100 billion into the office sector and kind of getting the, you know, the beta or the S&P kind of returns, if you will. We're looking to be very surgical in what we do. We're picking the very best opportunities that we see within a certain segment of what is a very big market. So kind of skimming the cream of the cream of the cream is kind of our strategy of finding those differentiated assets that, may look on paper from a return standpoint, just like the commoditized opportunity, but it's got inherent differentiating characteristics about it that will really, in the long run, lead to better returns.
Absolutely. And I think you guys have done a great job. If you look at what you're investing in and what you're offering, just being diversified. On the one hand, you have commercial real estate. On the second, you have these residential homes. And not only are residential homes, going for crazy prices right now, but a lot of your houses are in a vacation area or a potential second home area. And even second homes have gone gangbusters because people sit around, they go, well, now I can work from home. I can work from anywhere. I can work Thursday. I can work Wednesday through Sunday sitting in my beach house.
Sure.
So I think you guys have done an excellent job when you look at how you've built the company and how you've invested. It's really panned out well, kind of perfectly during this whole pandemic.
Yeah. So, as I was talking a little bit about before, our team is really unique in the diversity of experience sets. And because we have experience in both the development business as well as the acquisitions business and across a lot of different asset classes or property types and through a number of different economic or real estate cycles, that really positions us well to say, hey, the market's moving from A to B. Let's get to B before the market does, or the herd is going that way. Let's look the other direction and see what's over there. And we're positioned to actually execute on that. And that really opens our ability to go after the most compelling opportunities in the real estate space and really let the market drive where we're investing.
That allows you to be completely tactical and strategic as opposed to, getting whipsawed and trying to follow the herd.
Sure.
Yeah, that's great. So you have a couple business partners, and I have a business partner. So there are highs and lows. It's sort of like any other relationship or marriage, if you will. Mm-hmm. Positives to having business partners and negatives that you would say for someone that's looking to start a business and will be working with a partner.
I would say maybe tips first instead of positives and negatives. But
I like it.
Tips would be, think long and hard because you're getting married to this person. You're not going on a date with them.
Yeah.
And you get to know them and you probably spend more time with them than your spouse. And so you can probably finish their sentences better, et cetera. So, think long and hard and make sure that it's the right person across a number of different dynamics. So pros, I'd say, I think it's fantastic to have differing opinions to counter yours or to just provoke additional thought and different viewpoints, things that you may not think about. And in our business, avoiding mistakes is absolutely critical. So, having people with different but complementary experience sets really adds a lot of value. And so I think that's good. If you have a bunch of people all from a whole bunch of second basemen, then it's hard to field a team.
Yep.
So I think that's really important. Clearly defining roles and responsibilities is important. And then I think really thinking through the risk reward of how your partnership may be set up is really important.
Yeah.
So I think you need to make sure that risk is balanced relative to reward for each of the parties that are involved. An imbalance there, I think, can lead to potential problems down the line.
Yep. You think you bring up a good point about being able to not have all second basemen and have someone that thinks completely differently than you and be open to what they have to say. Like, oh, you know what? I never would have ever considered that, but that's a really good point.
Yeah, I think that awareness of maybe your preconceptions or biases or tilts is really important. And being able to keep that open mind perspective to really understand and listen and get the perspective that may be different than yours that the other person is conveying, and trying to understand, why they're saying that, and almost playing devil's advocate and saying, okay, this is my deal. I'm the champion of it, but I'm going to sit on the other side of the table, be the red team, so to speak, and try and poke as many holes in it as I can and make the other person defend it. And we'll see, we may find something that we otherwise weren't thinking about.
No, that really is a good point. So tell us a little bit about, I know you do a lot of work with the Boys and Girls Club at Delaware. Tell us a little bit about, your community service work.
Sure. So Actually got introduced to the Boys and Girls Club through a great mentor of mine at MBNA, who had been involved in the club at the state level for a long time. And when I moved down to the beach in early '06, got more involved specifically with the Rehoboth Beach Club, which was going through some financial challenges. And a couple of us got together and kind of decided, hey, there's a way we can create a really interesting or really fun event that will raise a lot of money for specifically the Boys and Girls Club in Rehoboth. So we started, I think, I guess it was maybe 2009, 2010, something like that. So a couple of years may have passed there, but we started what's become the Irish Eyes Open, presented by Jay Lamb for the benefit of the Rehoboth Beach Boys and Girls Club. And over the past 8 or 9 years, we've raised, and I think this year we're shooting to surpass $1 million for the club.
Amazing.
And so it's pretty amazing, but really, what the whole thing is it's really for the kids that really benefit from this program. And it's all the different programs that the club offers, all the clubs across the state. And, it's been a very challenging year and a half for both the kids as well as the staff across the organization. They didn't get to work from home for 18 months. They were showing up every day, putting, on the front lines and really helping to try and help and support these kids who really need it. And the role that the club's played over the past year and a half really changed into being much more of an all-day enterprise, almost like a school rather than just an after school and before school type function. So anyway, it's a great organization, been involved here in the Rehoboth area for a long time. And kind of all of our companies over time have done a lot to try and support where we can, both in terms of resources and effort.
That's amazing. Well done by you guys.
Thanks.
Yeah, one of the things I was thinking as you were talking, there's this, for those who don't know, there's this, I guess, stereotype about lower Delaware that referred to slower, lower. And it's sort of the same thing where in Pennsylvania, they call the area between Philadelphia and Pittsburgh, Pennsyltucky. So it has this negative connotation that that lower Delaware, once you get below a certain point, is very rural, almost backwoods, if you will. But a lot of the work that you guys are doing is really changing that stereotype and making it a desirable place to come, not only as a second home, but as a primary residence. So how do you think that's helped and that sort of stereotype? How do you think you guys are really working to kind of shatter that?
So I guess there's two prongs to that answer. The first is on the development side here locally. All of my partners and I all have longstanding roots to the area, and in some cases, a couple hundred years, kind of the first couple people. But I don't think any of us are planning on going anywhere anytime soon. And so, we all live here, and we take it very seriously that the projects we develop, we want to be accretive to the community in the area. And so, whether it's a commercial project we're doing here locally, a development project, and we're like, how do we create something that's cool and that I would be excited about going to and being a patron of and going there and hanging out, or just the experience I'd get, or whether it's a community and how do I design something that either my friends or, people I know or people I care about would be excited about going to and be proud to call their home. We spend a lot of time thinking about that stuff. And I think that's what also differentiates us from some of our competitors and the alternatives is part of that stereotype or slogan is enables us to run circles around people who maybe, aren't as rigorous as we are in the things that we do.
Yeah.
So I guess that's one side of things is, we take it on ourselves to make this area a better place to live.
Amazing.
A better place to work.
Yeah.
And then the other side of that is more a broader perspective from the company and some of our investing activities outside of the area, because we invest from Pennsylvania down to South Carolina, and the opportunity to create jobs here that are maybe jobs that historically haven't been found here. And
that's a great point.
And that's one of the most rewarding things I've found about just my whole journey of entrepreneurship or being a business owner and that's probably what I'm most proud of is the opportunity or being able to offer opportunities for just really great people to have a rewarding professional career.
Yeah.
With opportunities to progress, make a good living, and really enjoy what they do.
Yeah.
And all the things that I enjoy about my day-to-day job and career, or all the things that I've liked about different roles in the past, I'm passionate about being able to provide that to as many people as I can, kind of, who work within our organization and supporting, the things that we're trying to achieve.
That's amazing. That's a great answer. Yeah, I love that. That's an unbelievable thing to be proud of. So that's good for you. That's awesome.
Thanks.
Well, this is great. I really appreciated your time today. I really enjoyed it. So if you'd like to learn a little bit more about Doug and his company, go to jacklingoam.com. We first have to rate this beer. So we got our first bit of hate mail, I guess, if you want to say, about a beer that I rated, a Dogfish Head beer I rated. It was actually also a hazy. And as I reflected on it, I've had it a couple times since, and I would give it a higher rating. But this one, I do like Two Roads a lot. So I'm going to give this a 3.75 out of 5, which means I would definitely drink it again. So did you enjoy yours?
I did. The Vale is probably definitely one of my favorite breweries around. It's in a really cool neighborhood. It's called Scott's Addition down in Richmond. Would absolutely recommend going to check it out, but they put out some unbelievable beer. So I'd probably go 4 or 5 on this one. It's fantastic.
Love it. They're going to love that too. That's great. Well, thanks again for your time. If you want to connect with me on Untapped, my username is brcarney7. And to learn more about how our firm helps business owners with their financial planning, visit riversedgeadvisors.com. And finally, to hear past episodes of the podcast, go to happy-half-hour.com. Doug, thanks so much for your time. I really appreciate it. Cheers to you.
Thanks a lot, Brian. Good to see you.
Thank you for listening to Happy Half Hour with an Entrepreneur, sponsored by Rivers Edge Advisors. For more information on how Rivers Edge Advisors can help you, visit their website at riversedgeadvisors.com. If you'd like to connect with Brian Carney for business advice or just to share a beer, follow him on Instagram at riversedgeadvisors_LLC.